Okay, all right, guys. Today we will be looking into indication and correction. So today we'll be looking into indication and correction. Indication and correction. I'll try my best to make this simple as possible. So indication is when the market moves, creates a swing high or swing low, swing high, swing low, swing high, swing low, swing high, swing low, swing high, swing low. When indication, when the market is showing you something like this is an indication telling you that the market is just creating a swing high and swing low. All this simply means is the market is not creating any new high in price or new low in price. It constantly goes in the same direction, testing the support level and the resistance. So this is your level of support right here, and this is your level of resistance. So when you see stuff like this, movement like this in the market, it actually tells you that this is an indication. And like I told you from the previous class, you don't, right? Indication. It's better to wait for a breakout from swing high or low. You never trade indication because you can't just trade the market when the market is not showing you a direction. When the market keep going sideways, this is consolidation. You can call this consolidation. This is consolidation movement. Or what the market is just doing is going sideways. It's not moving up, it's not moving down. And when you see a market trending like this, you don't have to trade. So the best thing for you to do is for you to either put your notification right here and right here. So this is your structure and you're just waiting to see which direction in which the market is going to break above. Either it's going to break the swing high or it's going to break the swing low. And basically, like you notice something like this, the market will start creating, like this is market moving. So the more it keep testing all this level of support and resistance and it's not moving, at some point, the market breaks below the swing high. So this is a market breaking above swing high. So when the market breaks this level of support, now it tells you that we now have a new price. So let's say, for example, right here, we had about, let's say the price was $100 on the swing high level, which is the level of resistance. Then this level of support, let's say the price is around $95, let's say $85. You can't actually trade in the market like this because you don't know what direction in which the market wants to go. In this situation right now, this is when buyers and sellers are fighting in the sense that they're struggling to see who's going to dominate the market, who's going to take the market either up or down. So, based on my experience and based on understanding the market movement, all what you should do at this point is just wait. Most of the time, trading sometimes you have to have patience because if you don't have patience, you get into a trade when when you have not gotten the confirmation. And once that happens, you lose money because let's say you were trying to get into a buy, right? And you think that the market is going to trend this way and breaks out. Now you went and buy for the market to go up. Then the market now break down. What do you think is going to be? At this point right now, your portfolio will be in negative, maybe negative $50. Just whatever your risk, discipline is, then you'll be in negative. So if you want to really understand what an indication is, indication 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 only those are capital letters. Give me a second. Indications indication comes from price breaking um, above or below or come on or below swing below swing high or low. So this is what the market does. This is what the indication does. Meaning that this only comes after we have a breakout. It could be from, above the swing high, which is this very one right here, or the swing low. In this scenario, you don't have to do nothing. You have to wait until this indication plays out because it's gonna help you uh, make good decisions when you're trading. So that way you're not trading against the market because the market is always here to win, because you can't win all the time from the market. So sometimes you just have to wait. So when you wait, it gives you like more clarity on the direction of the market, on the direction in which the market wants to move. So that's all about indication. And correction comes in a form like this. This is a correction. A correction could be something like this on a swing low, meaning that after we broke out, the market, you know, all this movement right here, the market was just gathering all the liquidity, all the money as possible as they could get to break this level. Because for you to be able to break either the swing highs or swing lows, there must be enough money to break this level. Just imagine um when you drill a water, at some point you've made the water on the ground, but for the water to be able to come out to the physical surface, to the top surface, there must be a force, a gravity that will push that water. So in the sense of this trend movement, it has the same kind of ability, meaning for us to break either the swing highs or swing low, we need a liquidity, like we need a lot of momentum. to be able to break this level, meaning we need a lot of money. So if we have a lot of people panicking based on news or based on whatever the case could be, because when the market goes up, let's say we created a swing highs and lows in this pattern, we had swing high, swing low, swing low, swing high. So let's say you invested at this level was $50 in price and you invested $1,000 right here. So if the market came all the way up here to price, let's say at 90 $89, what you would do at this point is two things. It's either you close your position or you constantly move your stop loss. And stop loss is something that we'll get in, during the process of learning. It helps you protect your portfolio. It helps you with discipline. That way you're not blowing up your account. So you can choose the percentage of what you're willing to lose, in case the market goes against you, then at that point your stop loss right here will help you, protect your account. So either you move the stop loss or you close your trade. So basically, this is what happened when people are panicking selling, when sellers are in the market, all what they do is they sell. So meaning a lot of people took profit from this movement. So they make money. So let's say you invested $1,000 and $1,000 gave you another extra 1,500 or $2,000. You don't want all of that to pull back if the market start doing some correction, you know, creating stuff like this, lower high, lower low. Because when you start doing this, if you never had your stop loss, your profit will start decreasing. They will start going down. So you don't want to lose money or because you didn't want to sell. So, but it's always good for you to use a stop loss because the market could come down and have a reversal right here without having to touch get too close to your stop loss. So correction comes after a breakout. So when it breaks out, we have a correction, and a correction is just for us to be able to retest this level of support that now turned to resistance. Because when we were going on the sideways, this level was a support level. All year was a level of this level of support. And up here, you could look at this as level of resistance. But I do go with swing highs or swing lows. But if you want to go with level of support and resistance, it still helps because at the end of the day, we want to understand that this is where the market is currently is, and this is what I'm looking to do. It helps you, it gives you more clarity on what your next action should be within the market. So, and correction, I'm going to write this down here. Correction can can only happen after price makes makes a new high or a new low. That is what a correction means. Means that when we broke out of this level of support, the next level, the market wants to come here and retest. And if we retest and we're able to break above, that means the market have the ability to move back up because at this point we might have some buyers sitting right here at this level. So depending on the numbers of buyers, come on, man. So buyers could actually push this market from this level all the way back up because market do normally have what we call a fake out. It shows you that, oh, we're going down, but we reverse. It comes and there could be a lot of buyers and it's going to push this market back up. So sometimes, even me as a trader, I'm not going to get into a sell position. I'll wait for confirmation, meaning I'll wait for this to retest, then pull back, retest again, then continue. Something like this. I'll rather wait for the market to show me a movement like this. So let's say we break above swing high. All I'm waiting for is for this correction. Right here is the correction to retest this level of resistance that now turned to become support. At this level, before we broke out, this level was a resistance level. So when we break above the level of resistance, this level now becomes support. And that's when the correction comes in to retest this level. So me myself, I'll wait for confirmation to see if we can bounce from this level of support, then do something like this, retest, then continue. At this point, this is going to be my entering level. This is the level. This is where I'm going to get into the trade. My entry point. This is where I'm going to get into the trade to buy. That's if we broke above the level of resistance, then heading towards the uptrend. So me personally, this is where I'm going to get into my trade because first of all, I'm waiting for confirmation to see what the market is trying to tell me. Then once I get that confirmation, this is when I'm going to get into this trade. So I get in here and I move up. Yeah, sometimes, people feel like they've missed out of this move, but it's rather for you to be sure to have more confirmation on your trade before you can, easily get in. Because when you are doing your technical analysis, you need to understand that you need to understand how the market structure works, which we'll get into market structure later. You need to know your level of support and resistance. Then you need to know how your trend is moving because things like this will help you understand how the market actually operates. Then at this point, all what the market is doing right here is just is gonna gather all the liquidity in the market and make a reversal so you can enter a trade. So at this point, it's always wait for you to, it's always good for you to wait regardless. But some people will just jump in without trying to understand why we are at this level. So this is basically, I'm not trying to do a long video. This was just for indication and correction. And correction, like I told you, all what it does is just to monitor. Um, correction, you can use different time frame to monitor correction. Some people do go um, with some people monitor correction based on 1 hour time, H1. All right, 1 hour. Uh, some people could go with 15 minutes to monitor their correction because with a bigger time is better because it tells you like if you're getting into a trade for a long time, then you want to depend on a bigger time because a smaller time will actually show you something, but it's not strong enough like the bigger time. So some people wants to do like get into all monitor correction. Some people monitor correction on this time. So some people could monitor on, on this time. Some people could go with 5 minutes, but me personally, I do monitor indication within 1 hour and 15 minutes, depending on the kind of trade that I'm getting in that day. If I'm swing trading, yeah, then I'll start my technical from 4 hours all the way down to 1 hour, then 15 minutes. Then I can monitor. You can always have a good entry, at 5 minutes time. But for monitoring, 1 hour and 15 minutes is always good. And you can monitor it too on the 4 hours, depending on, what works for you. So basically, this is what market trade is all about. Sorry, market indication and correction is. This is correction right here. Correction is nothing but going back to retest that very level, like the swing low that we broke above. Sorry, that we broke below. Then if we retest this level and we get a rejection, then at that point you could do something like this. You wait for the market to play like this, then bounce back. But sometimes market could show you different things. It does something crazy. Sometimes the market could come in this form, shows you a breaks out, retest, pull back a little bit, then break above this level. At that point now, all the sellers right here, it takes all the sellers out, then push the market back up. Then it could come and rebound on this level, then continue. So that's why sometimes it's not good or it's not advisable to get into a trade without having a confirmation. So these are, things that you need to mind if you're doing option trading, if you're doing stock option trading, if you're doing forex, you can use this in any market. You can use it in stock, forex, like whatever you want, crypto and anything. Technical analysis can be implemented in every angle, in any area. So basically, this is just what indication and correction is all about. And correction can only happen after price makes a new high and or a new low. A new high in the sense of this right here. So you see, right here we were around $85, and the resistance that we were trying to break was around $100. So let's assume as we broke above this level, at this price level, we have $125. So this tells you at this level, 120, 25 or 24, whatever, then in this level of resistance that we broke, sorry, in this level of support, the price could be something around, this is the new low, which could be, let's say $70 or 60, let's say $66 in price, you know. So buyers, why I put this buyers, because sometimes buyers could, take the market from here and change the direction. But, that's why it's always good for you to wait to see how the market plays out before you can get into a trade. And if we want to go into a live chart, this is NVIDIA. I don't really do stocks that much because it creates a lot of gaps. And sometimes it takes time before they close this gap. Like as you can see right here, this is 15 minutes. All what this market is doing right now is moving in sideways. You can see exactly. It's creating swing high, swing low, swing high, swing low, swing high, swing low. So if I was to get into this trade, I'm not gonna get in until there is until we have a new price. Either we break above, we rebounds, then this is gonna be my entry. If you're sure of this, if you're sure that at this level we're not gonna get any 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 breakdown, then you can get into your trade. But me personally, I always wait for this level. We'll come back to retest before we continue. So exactly like I showed you guys on the material, this is what it looks like in the real market. Like this now, this is today is May 3rd. This is Nvidia. The stock market opens 9:30 Eastern time. See, this is where the market opened, went up, got rejection at this level right here, then pull back. And this could be news, this could be anything. So, but at this level right here, this is what indication is. When we are talking about indication and correction, this is indication. Correction is this very move right here. From right here all the way right here. This is correction. So that is it for today. I'll be doing more videos because I just started my YouTube channel. So you guys can excuse me. So you guys can support the channel. And if you have any comments, if you have any questions, feel free to reach out. I'm always here to answer your questions. And at some point, we'll be getting into a live trade. So that way you understand that it's not just me making these lectures. We'll be doing a live trade. And I'm trying to find a better day for that. So that way, like a day that works for me, you know, so that way we can, get into a live trade. Then you guys will see how these things plays out in the real market. So thank you for watching the video, and please subscribe to the channel and set up your notification so in case if I upload a new materials, a new videos, so you can actually get it. So as for Nvidia for tomorrow, um, anything can happen in this market right now based on the closing hours. This is where the market closes. So we closed above the market open at this level of 178, and we went high to 180. Then we started moving in sideways. So all these are consolidation. So if I want to get into trade, on this Nvidia tomorrow, I'll wait for a breakout. And once that breakout happens, if it's a downtrend, then I'll be waiting for something like this for Nvidia. So if you want to play Nvidia tomorrow, I would advise you wait for indication. If we have a breakout, then I'll be waiting for retest for correction, then retest, then continuation. But if the market changes and you have something opposite of this, then you know how to get it, just like the way I explained in this video. So I'll catch up with you guys in the next video. Thank you.